Hey everyone, welcome back to the channel. Today we're talking about Tattooed Chef stock analysis, fresh off the back of the Q4 2020 results and year 2020 end of year results for Tattooed Chef. Some great news in that earnings call yesterday. I live streamed it on the channel, you can check it out, but just by having a quick look I'll leave it linked in the description below. Absolutely fantastic news, beating on revenue year on year, beating on revenue quarter on quarter. The only slight area of concern for some people will be the significant increase in expenses, but I will explain exactly why that was, and I'm definitely not concerned about it, and I remain very bullish on this company over the coming years and a decade ahead. Very confident in their plan that they can reach 1 billion in revenue in 2026. If that sounds like something you're interested in, please smash that like button. Consider subscribing to my channel and I'll see you in there. Hey guys, welcome into the video. Here we are on the landing page for Tattooed Chef stock. The ticker, you know it by now, is TTCF. So yesterday it was up 4.5%, and overnight we haven't seen since the earnings call release, we haven't seen a major change in the share price, down 2% pre-market, 50 cents, no big deal. And over the last month or so it has crashed down to came down to $19 a share, in line with the rest of the market correction and the market crash that the market experienced. That wasn't too bad and presented a nice buying opportunity for myself. I had to average up a little bit because my average was down by $14. I'm now sitting at an average of $17, but I'm not that fussed. Anything below $25 for this company is a buy. Anyway, moving into the actual report itself. So they got record branded sales of 24 million. Branded sales exceeded the private label for the first year in company history, and the 2021 outlook has been reaffirmed and reconfirmed. So Sam Galletti has announced a nice little statement there. Based on current retailer commitments, they're going to increase the store count by 41%, and the points of distribution for Tattooed Chef products is going to increase by 35% at the end of the first quarter, and they are on the long runway for growth, which is absolutely fantastic. The brand's ability to connect with consumers through our food is revolutionising the way the customer thinks about plant-based food and what they're offering. By the end of 2020 they had 38 branded SKUs and a pipeline of 150 more to go. The company, as I noticed in the webcast, is vertically integrated, so they can take a product from inception to pulling on the shelves very quickly. They don't rely on any third parties at all to be able to get a product to market. They do it all themselves in-house from start to finish. So the financial highlights: revenue was for the quarter was 39.6 million, a 48% increase compared to the 26 million on the previous year on year. And the branded product revenue was 23.9 million, an increase of 172%, guys, compared to the 8.8 million in the previous period. Net income was 41.5 million compared to a net income of just 2.2 million in the previous year. The net income included one-time tax benefit resulting from the company's change from an S corporation to a C corporation at the time of the reverse merger in 2020, and the restructuring anticipation caused by the merger caused a tax basis of intangible assets, creating a deferred tax asset of 39.3 million. Adjusted EBITDA was 3.7 million, or 9% of revenue, when compared to 2.2 million or 8% of revenue in the previous year period. So that's on the increase. Financial highlights for the full year in comparison from 2020 to 2019: revenue was $148 million, 75% increase compared to the 85.9 million the prior year. The product revenue was a record 84.6 million, a 363% increase compared to the 18 million the prior year. Net income was 45 million compared to 5.6 million previous year. Tax benefit noted for the fourth quarter has aided in that a lot. Adjusted EBITDA was 9.6 million, or 6% of revenue, compared to 6.9 million or 8% revenue the previous year. So the fourth quarter 2020 results, revenue increased by 12.8 million, which is absolutely fantastic, or 48%, to 39.6 million in the 3 months ended December 31st 2020, when compared with 26.8 million the previous year. So this is absolutely fantastic, a really good solid quarter for the company, and a really great year overall. Absolutely brilliant in my opinion, and just reaffirms exactly why I'm so bullish on this company. Now, the one thing that I did raise earlier on in the video was operating expenses increased 6 million to 7.9 million in the 3 months ended the 31st of December. So that is why, when compared with 1.9 million from the previous 3 months in December 2019. And the reason for this is because of the one-off costs of becoming a public company, the de-SPACing process. They do actually explain it here, to be fair. But essentially, as part of the de-SPACing process, they now have extra expenses of being a public company that they didn't have before. So that is something that they have to obviously take into account in the public accounts and submit to us guys for examination. And that might be a little bit why the share price is a little bit flat and hasn't massively increased. But we really don't need to be too concerned about that for now. I mean, it's a one-off expense. It's happened. Deal with it. But then in the years ahead, that expense won't be there, and we'll come back down to a normal, as expected rate from then onwards. There will be some public expenses that follow through, but there's not going to be too much problem there in my opinion. So for the full year 2020, the revenue increased by 63 million, 75%, up to 148 million in comparison to previous year. Revenue increase was primarily driven by the increase in Tattooed Chef branded products, but partially offset by a nearly $1 million decrease in sales of private label products. They've got exciting new offers coming and products coming to the market. Such as the smoothie bowls, vegetable blends, buffalo cauliflower and other added value cauliflower meals. They came in just towards the end of the year, and they've obviously increased massively as well. So we're seeing fantastic growth by this company. You can read this full report yourself, of course. I'm not going to read every single part of it to you. As of the 31st of December 2020, they had cash or cash equivalents of $131 million. Then they proceeded to call their public warrants. So that means that the company is sitting on a grand total of $200 million in cash as of the February the 22nd, 2021. That is an astonishing amount of cash to be sat on. They have very little debt. They've already got a pipeline in process to produce the assets that they're going to, the products that they're going to sell. So they've got that money to spend on advertising, which is absolutely fantastic, and exactly why I love this company. 200 million just in the bank, ready to go, ready for expansion, ready for marketing. Absolutely brilliant. Now, looking out to the year 2021, they're expecting revenue of 222 million, an increase of 49% on the fiscal year 2020, a gross margin in the range of 20 to 25%, adjusted EBITDA in the range of 8 to 10 million, and net income in the range of 2.5 to 5 million. So that is the outlook, and there is no reason why they can't achieve that overall target and even beat it, in my opinion, because they are doing phenomenally well. The marketing and word of mouth is going to take hold massively, and that is where we're going to see this company punch through and start getting itself even more significant turnover. And as you can see now, you can just see the comparison between 2019 and 2020 for the year, and the last quarter here as well, and you can see the direct increases in revenue. Cost of goods sold obviously gone up because they're selling more goods. Gross profit gone up massively as well. Everything is going in the right direction. Absolutely fantastic. There's no reason at the moment why not to like this company. Outstanding shares are still in a good place. There's not absolutely tons and tons of shares on the market, so there is a chance for significant share price growth. I can't believe how bullish I am about this company, and it is exactly why it is the biggest position in my portfolio. Everything just stacks up perfectly. They've got nothing bad at all. The only way anything bad would happen to this company is if all of a sudden the plant-based phenomenon, the shift to plant-based eating, just fizzles out, and I can't see that happening at the moment. It hasn't so far. Even the Chinese are getting on board with it now. I read an article the other day. And then last but not least, as we come to an end of this consolidated financial accounts part, I'm going to quickly take you into another news article that was out the other day. They've launched 6 plant-based powered products at Target stores across the United States. This was announced on the 10th of March 2021. A new innovative offerings in Target: cauliflower mac and cheese bowl, cauliflower pizza, veggie hemp bowl, Buddha bowl, plant-based burrito bowl and enchilada bowls. All of these will be going out into Target stores all the way across the country, nationwide. Each product is $5 a bowl. Just even more products hitting the market and are likely to get, excuse the pun, gobbled up by consumers, and the company's going to have to produce more. Looking at the images of the food as well, absolutely fantastic, looks delicious, and I can't see why this isn't just going to increase its revenue hugely. What can I say, guys? What an astonishing company. With the amount of people that invest serious amounts of money in absolutely rubbish companies, this company is there. It's not going to double your money overnight, but all the fundamentals stack up. It's got tons of cash, no debt, revenue growing 50 to 100% each year, each quarter. I mean, what more could you possibly want from a company? It's stacking up brilliantly. Biggest position in my portfolio and will likely remain so as well. Thank you very much for watching, guys. Pleasure to bring you all this information. If you could smash that like button on the way out, that'd be absolutely amazing. And I'll see you in another investing episode. See you later.